Despite decent revenues, profitability of large-cap IT companies took a hit in the April-June quarter amid higher-than-expected margin erosion. Barring TCS, whose profit grew slower than expected, Wipro, HCL Tech and Infosys imported a sequential decline of 6 to 17% in net profits. The reason behind this remained the sharply elevated attrition rates and rising employee retention costs. Attrition levels for the Tier 1 companies continued to be around 20% or more this quarter, with Infosys in the lead among peers. Wipro reported a marginal drop, while others recorded a significant rise from the March quarter. The attrition rate, analysts say, could soon be bottoming out.
Most of the IT companies have come up with subdued performance, mostly below analyst expectations. A few performers have been from the mid-cap space. One of the continued bother is the attrition level, which in turn has an effect on the margins due to the increased employment-related costs. However, channel checks suggest that it could be topping out. Most of the managements have been upbeat on the order flows despite the expected global slowdown, especially in important markets like US, Europe, and UK. I would possibly take this positive management commentary with a pinch of salt, as the discretionary spend budget may in fact get slashed if we really witness a slowdown. The next two quarters could be slightly weak for this sector, and post December, we could hope for a upswing or a revival, as most central bank interventions would have been done by then.
That said, experts believe that the IT sector remains a positive bet given the recent correction. According to HDFC Securities, risk-reward is presently favorable for Tier 1 IT companies, as current valuations imply a modest growth ask rate, while mid-tier IT firms will sustain their growth premium. Sharing a similar view, Mitul Shah of Reliance Securities says that the valuations of the sector have become inexpensive.
Nifty IT index has corrected by nearly 26% from peak level because of the valuation contraction. But after this correction, these companies are now trading close to their historical long-term average PE valuation. Though still it is not very attractively valued, there is possibility of some pressure on the stock prices over near term. But we believe that now it is no more expensive and slowly becoming attractively valued. So we advise to accumulate at every decline with a long-term positive view on the stock.
Today, market action will be guided by the earnings season. Asian Paints, Bajaj Auto, L&T, Sanofi and Tata Power will be on the radar ahead of the Q1 results. Among other key events, the much-awaited two-day policy meeting of the US Fed will begin later today.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए?
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.